Three black crows. Three black crows is a term used by stock market analysts to describe a market downturn. It appears on a candlestick chart in the financial markets. It unfolds across 3 trading sessions, and consists of 3 long candlesticks that trend downward like a staircase. Each candle should open below the previous day's open, ideally in the middle price range of that previous day. Each candlestick should also close progressively downward to establish a new near-term low. The pattern indicates a strong price reversal from a bull market to a bear market. The 3 black crows help to confirm that a bull market has ended and market sentiment has turned negative. In Japanese candlestick charting techniques, technical analyst Steve Nissen says the 3 black crows would likely be useful for longer-term traders. This candlestick pattern has a counterpart known as the 3 white soldiers, whose attributes help identify a bullish reversal or market upswing.